Hi, I'm Neil. I'm going to try something new this week, and that is video. I have an article that I wanted to go into a little bit more detail, including the exhibits, but a podcast wouldn't make much sense, and another post obviously wouldn't work, so I'm going to attempt video. As you can see behind me, I don't have a big studio. I don't have a lot of cameras. I'm actually just doing a screen recording. If this video gets at least 300 views, I take it that there's demand or interest, and I'll do another one. So let's go to the article. Thoughts on Apple's $155 billion of cash. The first exhibit I wanted to go over is the difference between Apple's reported gross cash and net cash. Basically, net cash, it excludes the debt. So in 2014, Apple had $120 billion of net cash, $35 billion of debt. The long-term debt, $29 billion, is not due in one lump sum. So over time, Apple will be able to repay that. The commercial paper is just short-term debt. So over time, as you go into 2015, 2016, this dark blue bar representing net cash, it will continue to go down due to the share repurchases and dividends. And this long-term debt and commercial paper will probably will increase. It'll probably get bigger. And that's actually okay. I don't want to make it seem like debt is a bad thing. In terms of capital structures, debt could actually lower the cost of capital, which will help Apple and its shareholders. The risk here is Apple needs to make sure that it has enough cash, A, to fund the debt, and B, to eventually pay it back. But considering Apple's financial state in 2014, I think the amount of debt that they're taking on is manageable, and I will expect that to continue going forward. The next exhibit is, where is Apple's cash located? In 2014, only $18 billion of the cash is in the US. 137 is offshores. What does that mean? The $18 billion is what can be used for share repurchases and dividends. It's what Apple has available in the US. The 137 is not wasted. It just can't be used to return to shareholders. If you look at the difference between 2012 and 2013, and the difference between 2013 and 2014, you would see that this gray bar would show that some of it is being invested back into the business. So again, this $137 billion, don't think of it as being wasted. It's not stuck. The next exhibit is share repurchases. How much has Apple spent in 2014 on buyback? $45 billion, nearly double that of 2013. The dividends is up a little bit as well. Tim Cook mentioned every year Apple will increase its dividend, so you would expect this number to go up. The big question now is in 2015. Does this $45 billion, does it remain $45 billion? Does Apple maintain the pace of buyback, or does it go up even more? Does Apple increase the buyback pace by double? Well, to answer that, you need to look at the free cash flow. You need to see how much cash will Apple have for share repurchases. If we go to Apple's 10K, here's the cash flow statement. And I think this should be zoomed in so that people on iPhones and iPads can see it. This could look a little intimidating, but the main point here, in the line items to focus on, is first net income. You can see $40 billion. That is earnings. That's the number you're probably familiar with. But again, look at what it includes. It includes non-cash charges. Now, what is depreciation? Well, say I have a computer. Each year it's worth less. I need to reflect that in my financial statements. It's not that I'm taking my wallet out and taking cash and spending it because of depreciation. So it's important that in terms of the cash flow, we need to add that to earnings. And so here's what's going on. You take this net income, you add back the non-cash expenses. There's a couple other line items here that for today we don't need to talk about. And really what you get is cash generated by operating activities of $60 billion. Well, to get free cash flow, that's the amount left for shareholders, you need to exclude things for the business, such as, well, payments for acquisition of property, plant, and equipment, $10 billion. Payments for business acquisitions, that's BEATs, $4 billion. Add these together, you get about $13 billion. Subtract it from this amount. Subtract it from the cash generated by operating activities. You get about $47 billion. So that's Apple's free cash flow. Now, again, not all of that is in the US, so you have to reflect that when thinking how much is available for share repurchases. So if we go back to the article, I think in 2015, Apple's going to increase their share repurchase by 30 billion. And again, what that's taken into account is Apple's free cash flow in the US and their ability to issue more debt. So if you add 30 billion to Apple's current program, which has 20 billion left, that gives you about $50 billion of share repurchases. That's roughly equal to the pace we saw in 2014. So I think going forward, that might be a good run rate for Apple and not necessarily seeing share buyback ramp up by a whole lot. So again, I spent a couple days going through Apple's cash and the balance sheet. Hopefully this helps explain a little bit about what is going on besides just that one big number that you often hear in the headlines. If there's interest in this video, I'll do it again. So for now, thanks for watching, and I'll talk to you later.